Yeah, how's everybody doing today? This is a big day, big day. Cleanspark earnings today. It's going to be a fun one. Thank you guys for joining. Gonna have a lot to talk about. It's not just Cleanspark reporting earnings today. By the way, make sure you can hear me and everything. So if somebody just wants to type in the chat quick, everything's good, I would appreciate it. Let me know how you're doing today. But Marathon Digital is reporting their earnings today as well. And Flux Power, which I don't talk about much right now, is also reporting earnings, and we'll kind of go through those as well as Cleansparks. But Cleansparks is going to be kind of the highlight today. Okay, seems like you guys can all hear me here. Sound check good. Thank you, Calvin. Chad's in the house. Look at this. I figured this out the other day. I can actually pull you guys' chats on the screen. So let's say I want to bring Chad up here. He's now in the bottom left-hand corner. That's pretty cool, isn't it? Yeah. So before somebody asked here, earnings are after the close, I assume. Yes, they are after the market close. Usually they hit the newswire 5 minutes or so after market close. Hassanani, I don't know how to say her name. He says it's Q1, Rex. Yeah, technically this is calendar Q1, but for Cleanspark, their fiscal calendar doesn't line up with the regular calendar. So it's actually Q2 for them. It's kind of weird. Hard to keep track of. Grizzly says it's going to dump, isn't it? Well, that's not the right attitude, in my opinion. No, I'm actually really optimistic. I think the numbers are probably going to miss Wall Street estimates. I can show you my estimates here. I put out this tweet the other day. By the way, if you don't follow me on X yet, make sure you do so. Based on my research and my understanding, and how long do we have? Okay, about 4 minutes till market close. I see them coming in with $182 million of revenue. Analysts, I believe, are at $190 million. I have them scraping by barely with income from operations. This is the number I'm really not sure about because it can be really difficult to forecast their costs and in particular how much depreciation expense they're going to have. So it's going to be close. I don't know if they're going to show income from operations or not. If they do, it's a really big deal because that just shows you that the business model is sustainable. And up to this point, it's been really hard to convince Wall Street and investors that this business model is sustainable. I have a loss on their fair value of Bitcoin during the quarter of $100 million, which will hit their bottom line just based on FASB accounting rules, the GAAP accounting rules, I guess, which I have them coming in with a net loss of $98.4 million. We'll see how far on or off my estimates are here. It remains to be seen. I historically have been more accurate than Wall Street, but who knows? Every quarter is a little bit different. I have their cash costs, so this is all of their costs excluding their stock-based compensation and depreciation per Bitcoin of $52,000. So based on that number, they're making a pretty good margin right now. And I have their all-in cost per Bitcoin sitting at $92,280. So that's every single cost at the company included. That's cash, that's non-cash, everything included. I'm not stripping anything out, and their all-in cost, at least I think what it will be this quarter, is around $92,000. Again, remains to be seen. I should probably pull up the Cleanspark stock chart here so we can see any after-hours movement it does or doesn't have. Typically with mining companies, you don't get a whole lot of movement on the earnings results because we get monthly operations updates from these companies, so nothing is really that surprising in the numbers. What you really get a stock moving on is any sort of news you might get. Unfortunately, the Mountain City deal kind of fell through. I think you guys probably saw my video on that. But they might, I would guess we're going to get some clarity on the mining rig call option they have. They have to exercise that option, I believe, by sometime in the middle of June. So that's coming up. So we're going to hear something on that, and those are for the latest generation immersion mining rigs. What could cause the stock to move after hours might not be the numbers, but it might be if they finally issue second half 2025 guidance, because we've been stuck with the first half guidance, and they really haven't given us any clarity beyond that. Today, I wouldn't be surprised if we get that. I also expect the earnings call to be kind of aggressive. and in a good way, just where CleanSpark is going to try and reiterate that they're trying to demonstrate that this is a sustainable business model. They're trying to be the adult in the room, basically ending any constant dilution that has riddled the space for years now, proving that they can grow their business and pay the bills with their monthly production while also adding to their total balance. That's a huge deal. If they can demonstrate to Wall Street and all investors that this can be sustainable without ATMs, without dilution, that's a huge deal. And that's going to earn a lot of trust from the markets. Because up to this point, we really haven't seen that. We've had management teams that just fleece investors for billions of dollars. And a lot of these companies aren't disciplined. I compared having an ATM to the government, who can just go out and print as much money as they want. Well, it turns out when you can do that, your spending gets a little bit reckless. You aren't as financially prudent as you should be. It's the same thing with an ATM program. If you have these companies in the space that have active dilution programs where they know they can just go sell more shares into the market to raise more money no matter what, well, they're probably not as financially disciplined as they should be, and their spending gets a little bit reckless. So I think it's a huge deal. Just it enriches the bull thesis for CleanSpark if they can prove that this business is sustainable without dilution, and that hopefully will decrease the downside volatility of the stock in bear markets as well. Because you have to remember, if these companies are reliant on additional cash from diluting shareholders, if we go through a recession or a bear market, and there's a significant lack of demand for shares to begin with, and companies are still trying to sell more shares in the open markets via ATM programs, you can absolutely screw over shareholders and actually ruin your company forever. So that adds a lot of risk if there's any recessionary risks at play, which that's been the case for the last several years. There's been a lot of recessionary risks, which is part of the reason you haven't had a whole lot of money flow back into the Bitcoin mining company. So this is just a natural development movement along that learning curve of the industry, in my opinion. Still very early days, which is why I'm really excited about it. Yeah, it's a little disappointing. CleanSpark's only at $8 per share, and well, I'll give them $9 a share, I guess. But Bitcoin's trading at over $100,000 right now. I think everybody would think I was crazy if I told you that would be the case a year ago. But it's just it's the fact of the matter right now, and a lot of the things are outside of the management team's control, and some of it is part of the management team's control. Just remember that though, not everything is the management team's fault. They can, they have a lot that they can dictate, but with CleanSpark in particular, when it comes to their operations, they've really controlled their controllables. For a long time now, they've been known as probably the best company operationally. But yeah, it remains to be seen. Anyways, I would assume we're after market hours now. So let's go ahead and I want to see if I can can't get the CleanSpark earnings deck yet. But I'm going to go, again, usually it's right around 3:05, so 5 minutes after market close that they send the press release through the newswire. That will be able to highlight it and go through it. Scooby Dooby Doo says, are you going to do a sale on membership? I'd love to be a gold member. Honestly, I haven't been doing a lot of buying and selling lately just with tax season. And honestly, I kind of thought that the markets were topping a couple months ago. I actually made a video on it in late January, how I thought the market was going to enter kind of a choppy period, and that's what we've gotten. But yeah, buying and selling will resume hopefully tomorrow. I'm hoping to buy some for members, but unfortunately, it's really hard for me to do sales on the membership, but you can get like a 15% discount, I want to say, if you pay annually on Patreon or something like that. So check that out if that interests you. Matthew says, thumbs up for the early coverage. Hey, thank you, Matthew. I appreciate that. Kite says, change to Q1 in the title. Guys, CleanSpark's fiscal year does not align with the calendar year. This is CleanSpark's second quarter results. Their fiscal year is off base with the regular calendar. So this is Q2 for CleanSpark. Mitch says, as a shareholder, the share price performance has been nothing short of a complete disappointment. Yeah, I can't fight any of that, Mitch. I 100% agree with you. Janko says, I believe CleanSpark's the best miner. I also agree with that. Fab4 says Q2 is correct for CleanSpark. Yeah. So yeah, what's going on, everybody? Hope you guys are having a great day. I'll keep refreshing this page here until we get the Q2 results. Again, I can highlight what my estimates are, at least put them on the screen here. Here's my revenue estimate, $182 million, and all my other estimates. $182 million is about $10 million below Wall Street estimates, so I actually think they're going to come in light. But I don't think that's really going to make the stock price plummet. It's kind of an expected thing, in my opinion, just based on the way Bitcoin itself traded throughout the quarter. I also want to hear, I'm kind of going all over, but I also want to hear an update on Cleanspark's digital asset treasury management team, and just kind of see what the progress they're making there looks like. I know just based on following their wallet address that they have like 2,500 Bitcoin in yield generation mode. And we've talked about how, even if you can get a 4% yield on 2,500 Bitcoin, that's an additional $5 to $10 million hitting the bottom line for shareholders every year. Just another thing that's going to kind of help weather the storm for Cleanspark if a bear market does pop up. They're really focused on sustainability and discipline and finding other ways to buoy their business if hash prices drop. Let's see. Okay, somebody said, Sanel says, did you answer my question? I may have missed it. Let's see. I don't see your question. Maybe type it again, Sanel. Sebastian says, happy belated birthday. Hey, thank you, Sebastian. And thanks for tuning in. That's awesome. Yeah, thank you. Thank you. I'm 24 years old. My first time on camera as a 24-year-old. Feel like I'm getting old now. Mitch says, hopefully the shorts leave soon, Rex. They seem to be picking on Cleanspark. Yeah, but you have to remember, every short seller is a forced buyer of the company at some point in the future. So I actually encourage, short selling doesn't mind. It doesn't bother me, I guess is the way I should put it. Because I know at some point in the future, they're going to have to buy the stock, and that's going to benefit me. So, might have to be patient. But, okay, somebody says Cleanspark's down 5% after hours. Let's see. No, it's only down 2%, so it's bouncing back, and it's basically flat now. Let's see if we got the news to come across the news wire here. I don't have anything on my end on Cleanspark's IR page. I can search on, sometimes Twitter or X is the fastest. Yeah, here we go. Just a second here. I'll get it pulled up for us and we'll walk through it. The earnings call is at the bottom of the hour. And it looks like Flux Power just sent their earnings through as well. So if I have time, I will cover those. I am still a Flux Power shareholder. Okay, come on. I'm trying to get this pulled up. Okay, maybe the easiest thing to do is just airdrop this to my desktop here. And there we go. So this is on Stock Titan. I wish I had the Globe Newswire edition of it. So revenue increased 62.5% year over year to $181.7 million. Let's see what my estimate was. Oh, I was almost spot on. 182.1 million. 182.1. So that's really close. So my estimate there was really close. That speaks good news to my model, I guess. Bitcoin production grew to 1957. What I have them at? I had them at 1956. So I missed a Bitcoin somewhere in my calculation there. Revenue of $92,811 per coin. Strong balance sheet with $97 million of cash and $1 billion in Bitcoin holdings. Substantial working capital of $838 million. On track to reach 50 exahash per second mining capacity target in June. So that's good news. And they secured a non-dilutive financing deal through Coinbase revolving line. We already covered that. That's a $200 million thing there. Net loss was $138.8 million compared to net income of $126.7 million. So that is a bigger loss than I had. I had their net loss at $98.4 million. So clearly I was off there. It might have been my depreciation calculation. We'll have to see when I go through the numbers. Adjusted EBITDA was decreased to negative $57.8 million. Significant long-term debt of $600 million. So yeah, that's one thing we'll have to monitor. Obviously right now, it's with Bitcoin mining companies, especially ones that hold Bitcoin, it can be tricky because their leverage ratios can change so much based on what the price of Bitcoin's doing. Like if Bitcoin appreciates, well, then all of a sudden their leverage ratios look a lot more healthy. But if Bitcoin falls, their leverage ratios look more poor. I really want to see if I can get the official version. I like what Stock Titan does, but yeah, I don't have the official press release yet or the source version of it. So we'll stick with Stock Titan for now. I apologize for all the ads and whatnot. Okay. I'll read you the quotes here. This was a quarter defined by discipline, scale, and continued strategic clarity. said Zach Bradford, the CEO. As other players shift direction or decelerate growth, Cleanspark has doubled down on being the only remaining pure-play public Bitcoin miner. That is true. We believe that focus matters now more than ever, and we remain on track to reach our 50 exahash per second target during June, all while growing our Bitcoin treasury, strengthening the balance sheet, and prioritizing long-term stockholder value. I'm hoping they're going to give us some clarity on second half 2025 growth during the earnings call, because it doesn't look like they said anything here in the official press release. Cleanspark has a track record of leadership in this industry. We've been infrastructure first since the beginning. We pioneered the ASIC option structure to control our own destiny, and now we're leading the way in treasury management and non-dilutive financing. Our results reflect the operating leverage that comes with scale paired with disciplined cost control, said Gary Vecchiarelli, the CFO. We continued to invest in strategic and accretive expansion without relying on dilutive capital, as demonstrated by our expanded revolving line with Coinbase. Additionally, we remain one of the most efficient cost structures in the industry. Our digital asset management group made meaningful progress during the quarter and is preparing to optimize our treasury, positioning Bitcoin as... Oh, okay. I didn't see the comma there. And is preparing to optimize our treasury, positioning Bitcoin as both a productive asset and a source of strength on our balance sheet. These efforts reinforce our long-term focus, scale with discipline, capital efficiency, and stockholder value. And then they go through the numbers I already highlighted. Their cash position's a little lower than I thought it would have been, so we'll have to kind of see what happened there. It's possible that they exercised that mining rig call option that they had with Bitmain. If they did, they're going to talk about it in the earnings call. Current liabilities, so liabilities due within the next 12 months of just over $100 million. Long-term debt of over $600 million because of that convertible debt they took out at the end of last year. Total stockholders' equity of $2 billion. That's crazy. $2 billion in stockholders' equity. Okay, the company had working capital of just less than $1 billion as of March 31st. Obviously, we're in May now, so these numbers are a little out of date. When we get the 10Q, the SEC filing, they'll give us an update on their cash position, a more recent update on their cash position, and some other figures that we can look at, including capacity of $50 million on the Bitcoin collateralized line of credit. So that's interesting. Does that mean they drew down $150 million? Or is that saying before they expanded that line of credit to $200 million? That's kind of confusing. We'll need some clarity on that as well. How are we feeling about these results, guys? Let's see what you guys are saying. Report. Okay, somebody said the report is on Cleanspark's website now. Yeah, they are. Okay, thank you. Now we can get rid of all the ads on Stock Titan. But we covered everything in this. We'll see if they have some... Okay, bottom of the press release, they have some balance sheet and income statement information. Their Bitcoin balance essentially doubled since September of last year. That's crazy. Cash fell $25,000 or $25 million. That would be prepaid expense of $10 million. Nothing too big of a deal here. Derivative instruments fell quite a bit. I wonder what that is all about. We'll have to cover that if we can find some clarity in the 10Q. Investment in debt security at fair value, $3.8 million. Interesting. I don't know. That's not ringing a bell. I wonder what that is. What would that be? Investment in debt security. Let me know in the chat if you can think of what that would be. I could just be drawing a blank right now. What debt security did they invest in? I can't remember. Let me know if you guys know. Okay, assets. Non-current. So Bitcoin is considered a non-current. No. Okay, so this is interesting now. So they have Bitcoin on. This is new. They have Bitcoin on the balance sheet listed as a non-current asset, and they have Bitcoin on the balance sheet listed as a current asset. I wonder what a non-current Bitcoin asset means, or what that entails. Okay, interesting. Property and equipment obviously grew as they've invested in infrastructure. Deposits on miners and mining equipment fell quite a bit, meaning that they've taken delivery of those mining rigs. Accounts payable fell. That's good. Accrued liabilities doubled basically since September of last year. Loan payable, that's the convertible debt sitting on the balance sheet now. Okay, and here's where we can see if they diluted shareholders at all. And no, they did not. 280 million shares outstanding. So that's good. Sticking to their word there. Obviously, they don't have an ATM program active. This number that's crazy to me. $2 billion in stockholders' equity. And that's only grown since the end of March, which is when these numbers are from, because Bitcoin has appreciated in value since then. Okay, here's your revenue number. This is where I need to see where I was off on my estimates here quick. And how long do we have till the earnings call? 15 minutes. So yeah, we have time to do this. We have time to walk through this quickly. So $181.7 million in revenue. I was essentially spot on with that. More accurate than the Wall Street analysts were. So that's a good number there. My model was accurate there. 182.1 is what I had. They came in with 181.7. Okay, so cost of revenues was quite a bit higher than I had forecasted. My forecast was, in this spreadsheet, I have a whole Cleanspark spreadsheet for my paid monthly members. Just search up RexFinance Patreon if you want to join the membership. We have a lot of fun in there. A lot of like-minded investors and Cleanspark shareholders. Obviously not required at all, but if you're interested in downloading this spreadsheet, I'm also putting together a booklet interpreting all of these mining companies' results that I'll post for members here in a few days. Okay, anyway, so I was off on cost of revenues. So I'm curious what happened here. I'll have to... that really bothers me that I was off that much on it. Dang it. Oh, well. Professional fees were flat-ish. So professional fees were lower than I had. There wasn't as much M&A during the quarter, so that's why that is. Payroll was $15 million. What did I have? Payroll, 21. So, okay. All right. Well, professional and payroll, I was off on. G&A, I have 11.7. I was close on G&A. Depreciation, 72.5 is what I have. They have 78, 79. So I was off on depreciation and cost of revenues. So I'm going to have to refine my model there. I was off on those two numbers. So I'll have to bump those up in the spreadsheet. Obviously, that's why they came in with a loss from operations there. And I had... where do they have... Why do they not have loss on fair value of Bitcoin? Did they just choose not to report that because it was unfavorable this quarter? Am I blind? Am I missing something here, chat? Let me know. Am I missing something here? Oh, wait, here we go. No, that's not it. They did not report. Oh, here we go. God, I am blind. That's totally my bad. Totally my bad. Here we go. Loss on fair value of Bitcoin, $127 million. That was a larger loss than I had. So that's another reason that my net loss was a little bit, better than what they came in with. So I estimated their loss on fair value of Bitcoin was $100 million. They reported $127 million. So I'm glad we found that. Let's see what the stock's doing. Nothing spectacular, obviously, so far in these results. Down 5% right now. I don't know if this report really warrants down 5%. There's nothing in here really that's that news breaking to me. I would assume this is just kind of the algorithms selling down the stock because technically they missed on the top and bottom lines. But if you do any of your homework, you knew that was going to happen. So this is probably all algorithms right now. I wouldn't be surprised to see this recover tomorrow or even after hours during the conference call today. When you have more natural buying pressure come back in, there's nothing in this report that screams to me that we got to sell clean. There's really no bad news. Now there's not really any great news, at least included in this press release either. And maybe that's what the markets wanted, was some piece of other news. But that's the stuff we'll get in the earnings call. Okay, let's go through some of these comments here before the earnings call starts here in about 10 minutes. And we could cover Mara's earnings. Let's see how Mara is trading after hours. Mara's down 3%, it says. Let's just cover Mara here quick. And gosh, dang it, I don't like Stock Titan. Let me go to Mara's IR page. Okay, here we go. Let me zoom in on this so we all can read this, and it's easier to follow along with. And then I'll get back to your comments. Okay, so this press release literally has zero information at all. That's helpful. Revenues increased 30% to 214 million. Bitcoin holdings increased 174% because they bought a lot of spot Bitcoin to 47,500. And other than that, Marta didn't give us like any information. What happens if I open the shareholder letter? Okay, here's a little more information. Okay, there's an 18-page letter here, so I won't go through all of this, but maybe we can just cover their base notes here. So covered revenues. Mara lost almost $500 million during the quarter. I'd guess most of that is from the loss on the fair value of Bitcoin. Cost per petahash per day. That's an interesting figure. Improved by 25%. That's a positive. Hash rate increased 95%. It'll be interesting to see what Mara wants to do with their hash rate guidance as well. Purchased energy cost per Bitcoin was $35,700. Cost per kilowatt hour was 4 cents. That's lower than they've been at, I believe. So they improved their Bitcoin. Oh, okay, Mara, I see what you're doing. So for months, they were not reporting Bitcoin yield per share because it was literally negative. But now all of a sudden it flipped back positive. So now they want to throw it back in their press release. Kind of funny how management teams play these games. Positive Bitcoin yield per share of 3.5%. I think that's one of the stupidest freaking metrics ever. I don't know. Maybe I'm alone in that thinking. They mined almost 2,300 Bitcoin and purchased 340 Bitcoin. Interesting. That's not a very large purchase of Bitcoin. I'll stop there on Mara. We're all here for Cleanspark. I'll go through Mara later on my own and maybe post something for the members. But it looks like Mara and Cleanspark had very similar quarters to each other. Cleanspark's starting to bounce back, maybe. We'll see. Again, I think that's a lot of just algorithms trading it. Let's get to the chat here. And let me switch here. And let's see what you guys have to say quick. Okay, here we go. Trainer says, I'm more interested in Cleanspark earnings in the next quarter. Steadily buy a few shares each day and feel September onwards is when the larger moves start. I agree with that. You know, I really... I mean, obviously we care about these results, but we care more about what they talk about in regards to the future. And yeah, you know, these results, Bitcoin had a rough quarter for any companies that hodl. They had to take large losses on the fair value of the Bitcoin they hold. But moving forward, if Bitcoin continues to appreciate, the opposite's going to be true, and they're going to have some tremendous numbers to report in future quarters. Chris says shorts dumping again. What a mess. Okay, I don't know. Let's see. Zach says go Cleanspark. Puzzled says I'm going to die of old age before a good earnings report. Well, wasn't it last quarter they had a really good earnings report? So you saw one. CR says the market makers won't let this move until options are destroyed and investors capitulate again. Everyone is exhausted with these miners' opportunity cost. Yeah, but that's exactly the reason that right now is probably kind of bottom of the barrel for Bitcoin mining investors. Like everybody that's wanted to sell has already sold. There's nobody that's like teetering on the edge that just, you know, if there's one piece of bad news, they're going to sell. No, everybody that wants to get out of these companies is already out. I mean, the capitulation has already started, which is usually a sign, or maybe even complete, which is usually a sign we're close to the bottom. We're certainly closer to the bottom than the top of valuations. So yeah. DJ said, Bitcoin dominance top today, says Raul Pal. If only Cleanspark could perform like an altcoin. I don't want Cleanspark to perform like an altcoin at all. At all, man. Altcoins absolutely get wiped out in any sort of bear market. I'm not buying a lottery ticket with Cleanspark. I'm buying a company that I'm investing in. That's the way I look at it. Yeah, Sean says $8 a share with $101,000 per Bitcoin is absolutely insane work. Grizzly's a Grizzly. His name's Grizzly Bull, but man, he's more like Grizzly Bear. Negative Nancy here. Bitcoin is $101,000. It's over for this trash stock. Okay, I don't know. So, you know, my opinion here is a lot of people that are viewing this earnings report in a negative way, or that are saying negative things about the company, are saying so because of what the stock price is doing rather than actually interpreting the results. So just keep that in mind here as you read through each other's comments. Here we go. Sebastian's got something good to say. Take out the FASB impact and depreciation. They would have had a positive EPS, but still negative with depreciation. Yeah, and I go back and forth with stripping depreciation in or out of my calculations. I've leaned more towards leaving it included, because ultimately that's how you account for the purchase of mining rigs, right? So you have to account for it at a certain point, but the one caveat there is you have a company like Iron that depreciates their mining rigs on a 4-year basis, and a company like Cleanspark depreciates them on a 3-year basis. So Cleanspark's depreciation is much more aggressive, which makes it very, very difficult to compare a Cleanspark to an Iron if you're trying to look at cost per Bitcoin, because it's just literally an accounting difference that throws it off. So you kind of have to normalize those two things. And that's extra work you have to do, which isn't always fun to do. It's pretty easy to do, but it's a pain. And that's why a lot of people just strip depreciation out of these calculations, because it can vary for different companies. Sean says, seriously, Rex, do you have an answer here? How do these companies create shareholder value moving forward? Well, it's operating leverage, right? It's when these companies can finally demonstrate they can mine and have income from operations and do so without dilution. And that's what Cleanspark is set out to do right now. That's how companies create shareholder value. It's not necessarily just everybody just wants companies to go out there and buy back shares. That's not value creation. Like that's artificial value creation. That's an artificial bump to earnings per share. But what you should care about as a shareholder, if you want real shareholder value creation moving forward, is the operations of the company, and that's even ignoring like any gains on fair value of Bitcoin they might see. I better make sure I have the earnings call pulled up, and I do. Okay, so we're good to go whenever it starts. And it should start here in just a couple of minutes. But that's it. And it's what the company's doing with their digital asset management team. They hold a ton of Bitcoin on their balance sheet, and if they can earn even just 4% on that Bitcoin every single year, that's $100 million plus of additional income that goes to the bottom line for shareholders at the end of the day. So that's another big future, in my personal opinion. Ziller says, Rex sounds nervous. What's there to be nervous about? Let's see. Other comments here. There's a lot of them. Sorry, I'm skimming through them. I'm trying to answer the most important ones because I appreciate all you guys showing up. Trainer says, when do you think the market will value the HODL facilities and mining equipment? The valuation is crazy. Trainer, what people don't realize is a lot of the reason these companies are priced the way they are is not. It is to do with what the management team's done in the past and the overall view of the industry and how the image has kind of been tarnished from management teams that just are playing poker with shareholder capital. But it's also when Bitcoin mining companies do the best. It's when there are zero recession risks in the economy. It's when the Federal Reserve is cutting interest rates. It's when the President of the United States is stimulating the economy. It's when people have so much money in their pockets that they don't know what to do with it. And it's when investors really want to chase risk And when there's any sort of recessionary risk in the markets, whether it's warranted or not, these companies aren't going to trade at extreme valuations. So a lot of it is outside of the management team's control with this. So when do I think the market will start to value those things? Well, over time, as the markets start to realize, a recession really isn't likely. It turns out politically, you want to be liked. And if a recession happens under your watch, you're not liked and you're not going to get reelected. And midterms aren't going to go very well for you. So there's a Trump put that's active, protection. And there's also a Fed put. Listen to the Fed's language. They say they still talk about how the federal funds rate right now is restrictive to the economy. They say it's less restrictive. They're not saying that it's stimulative yet. They're saying it's less restrictive. So they still have a bias to bring interest rates down over time, which is going to stimulate the economy. So it might not be in 2025. It might be 2026. I mean, people just don't have much patience here. And I think a lot of people are going to miss out because of that. And it's just unfortunate. But I realize I have more patience than a lot of people do. So I'm a little bit different than a lot of people, I think, in that regard. So let's make sure the earnings report has not started yet. Nope, they're still playing music. When it does start, I'll flip over there. We'll keep answering questions. Aaron says, owning a miner is better than Bitcoin because a miner can get Bitcoin for less than the current Bitcoin price, or at least Cleanspark can. Yes, absolutely. That's the value creation. And these companies just have to demonstrate that they can do that with every expense that the company considered. They have to prove that, including depreciation, including stock-based compensation, including every single expense at the company, they have operating leverage that will just grow as Bitcoin continues to appreciate. That's the part of the cycle we're in right now. Sean says, what is your timeline? Years. By the time they're creating shareholder value, Bitcoin will be 500,000. You'd be better off holding that the entire time. That's my point. I disagree with that. This year in 2025, Cleanspark is at least matching Bitcoin's performance, if not outperforming Bitcoin. I'd have to check again. Yeah, Sean, that's another thing. They just have to prove it out. They can talk about it all they want, but they have to actually show that they can generate yield on their Bitcoin hodl. Mitch says, would be a good chance for them to buy back more shares with the low share price. Yeah, but you have to consider the opportunity cost of buying back shares. Let's say that, in the 2022 bear market, instead of growing operations, Cleanspark chose to just buy back shares. Well, the share price would be much lower than it is today. So that's kind of the catch-22. Yeah, you can buy back shares, and Cleanspark recently did this. Don't forget that. They did buy back shares, $150 million worth of shares, but that comes at the expense of growth. And if you're buying back shares, you don't want to do that with money you're raising via dilution because that's counterintuitive, and you also don't really want to borrow money to buy back shares in such a volatile space like Bitcoin can be. Hey, Sean, I appreciate you. Ram says, imagine if Rex bought MicroStrategy instead of Cleanspark 4 years ago. Yeah, man, I'd be sitting in a good spot, but I'm still sitting in a pretty good spot with Cleanspark. My two largest buys happened at $2 a share back in 2020 and then again in 2022. So I'm still sitting okay. And I do think, you guys probably know my opinion on MicroStrategy. At some point, the bubble is going to pop. You have every retail investor that's a major shareholder of MicroStrategy thinks they're infallible and all-knowing when it comes to capital markets and debt markets, and they think that MicroStrategy can't blow up because the debt's unsecured and yada, yada, yada. Well, I'm not going to get into the tangent. Never mind. Just know that MicroStrategy can and probably will experience hardship at some point in the future. And they're at much more risk of that than Cleanspark, in my opinion, because of their much higher cost of Bitcoin sitting on their balance sheet. Let's see. Grub says it's absolutely not better than owning Bitcoin. Oh yeah, I think the call's starting. Let me flip over here. I'll get back to these questions. Keep commenting as this goes on.
Welcome everyone to the Cleanspark.
Let me know if you can hear everything okay.
Quarter 2025 earnings conference call. All lines have been placed on mute to prevent any background noise.
If one of you just wants to
question and answer session.
If one of you just wants to give me a quick mic check and tell me you can hear the conference call, let me know. I have them muted right now, but I'll unmute now. Just give me a yes or no.
Please press star one again. Thank you. Harry, you may begin your conference.
Thanks, Jeannie, and thank you for joining us today for the second quarter fiscal year financial results for Cleanspark, America's Bitcoin miner, covering the 3 and 6 months ended March 31st, 2025. Our press release was issued about 30 minutes ago and is available on our website at www.cleanspark.com. Additionally, the 10-Q will be filed shortly. Today's call is also being webcast, and a replay and transcript will be available on our website. On the call with me are Zach Bradford, our Chief Executive Officer, and Gary Vecchiarelli, our Chief Financial Officer. Keep in mind that some of the statements we make today are forward-looking.
Some of you said the volume was too quiet. Let me know if that's better. I tried to increase it. Let me know if this is better now.
Remain subject to the risk factors disclosed in our most recently filed annual report and 10-Q. We will also discuss certain non-GAAP financial measures concerning our performance during today's call. You can find the reconciliation of non-GAAP financial measures in our press release, which is also available on our website. And with that, it's my pleasure to turn the call over to Zach.
Thank you, Harry, and thanks to everyone for joining us today. Our second quarter of fiscal 2025 demonstrated our ability to deliver strong, consistent results across all operating environments. Because we focus on the fundamentals, cash-on-cash returns, and manage.
I just increased it more. Is that better? Do I need to keep increasing it? Let me know.
Scale, strategy, and operational excellence resulted in increased hash rate, improved efficiency, higher revenue, and laid the groundwork for continued growth. In Q2, revenue increased 12% quarter over quarter and 62.5% higher than the same period last year. Gross profit reached nearly $100 million, up almost 5% sequentially, and more than 24% year over year, with a gross margin of 53%. While we reported a net loss, this was primarily driven by the quarter-end decline in Bitcoin spot price and not by changes in our mining operations. Our Bitcoin production increased slightly compared to the prior quarter, outpacing difficulty. As a result of our strong margins, our Bitcoin treasury has grown to over 12,000 as of April 30th. Average revenue per Bitcoin was up 10.5% quarter over quarter and nearly 69% year over year, while our marginal cost per coin rose, reflecting both increased network difficulty and higher nationwide power prices. We remain focused on margin and long-term performance rather than any single metric. I want to be clear on what that means. That means we do not manage to power prices, and when margins are healthy, we run through slightly elevated power prices, as long as this drives more value to the bottom line. As a result, the average power price printed higher while delivering increased gross profit. This resilience is the result of our infrastructure-first, portfolio-based strategy. By operating across 4 diverse states, Georgia, Tennessee, Wyoming, and Mississippi, we are able to balance regional price volatility and maintain consistent operations and production. The rise in power costs this quarter largely stemmed from higher prices in the Southeast, related to elevated demand charges and weather-related increases in January and February due to winter storms. Since March, we have experienced improved prices in the region. In addition, we were still implementing software to support a lower blockchain-specific tariff in Wyoming at the end of March, which is now fully implemented, and we successfully moved to lower pricing in April. As we navigated the quarter, rather than curtailing operations to chase a lower per kilowatt price, we elected to maximize production and bottom line impact, a decision made possible by our leading fleet efficiency and strong revenue per Bitcoin. As a result, we delivered a gross margin exceeding 53%. We ended the quarter with a total liquidity position of over $1 billion. Given our scale, we've evolved from the near 100% HODL strategy adopted in late 2023 and have begun using a portion of monthly Bitcoin production to support operations. This marks a deliberate and disciplined shift, in contrast to peers who continue to fund operations through equity dilution. I want to reiterate, we concluded our outstanding ATM in November last year and have since not issued a single share to capitalize the business. We have no plans to initiate an equity offering given the accretive opportunities available to a company with a strong balance sheet like ours. We remain committed to Bitcoin as a core long-term asset. We believe shareholder value is best served by balancing treasury growth with strategic monetization. To that end, we are continuing to diversify our capital structure, and our strong balance sheet gives us the flexibility to act decisively. As we move beyond 50 exahash, Cleanspark is well positioned to sustain long-term growth and shareholder value through focused execution and prudent capital management. We navigated this quarter not by chasing headlines, but by focusing on business fundamentals and delivering results. Some key highlights include revenue increased in both Bitcoin and USD terms, while cash overhead decreased 16% quarter over quarter. Although a mark-to-market adjustment to Bitcoin price created a GAAP net loss, this has since been offset by price recovery in April, and even now, Bitcoin sits above $100,000. Our scale also continues to yield competitive advantages. Fleet efficiency improved significantly from an average of 18 joules per terahash in December to less than 17 joules per terahash at the end of April, largely mitigating higher energy prices and rising network difficulty. Our power under contract is approaching 1 gigawatt, providing opportunities for future expansion. We remain on track to reach 50 exahash by mid-2025 on our position to pursue additional capacity where we see strong ROI, whether through organic growth, site expansion, or opportunistic acquisitions. Beyond our nearly 1 gigawatt of power currently under contract, we also have an extensive pipeline of additional energy opportunities that we believe will support our growth into the future. Our Bitcoin treasury now exceeds 12,100, the third largest among public miners, and every coin was mined by us here in the United States and not bought in the open market. We've begun strategically and systematically monetizing new production to fund operations and are advancing a rigorous, accretive approach to digital asset management, all while preserving our commitment to shareholder value. Our disciplined approach to capital allows us to grow without equity dilution, supported instead by tools like our expanded line of credit with Coinbase. We're especially proud of how our fundamentals held strong amid a triple challenge: rising energy prices, declining Bitcoin spot prices, and increasing mining difficulty. At quarter end, Bitcoin traded at roughly 81,000, down from 93,000 at the start of the calendar year, requiring a mark-to-market adjustment to our treasury under GAAP accounting rules. Encouragingly, these unrealized losses were reversed by price appreciation in April. Mining difficulty rose 3.6% during the quarter, while power costs increased. Yet, thanks to improved fleet efficiency, our gross margin compression nearly matched the difficulty change, demonstrating our ability to absorb external pressures through operational gains. Our approach has never been about chasing the lowest cost per kilowatt hour. Instead, we managed to margin, making deliberate decisions, including running through higher price periods when doing so generates positive cash flow. At the core of this capability is our best-in-class power management team, empowered by advanced technology, real-time analytics, and dedicated operations staff. This deep internal expertise allows us to maximize marginal profitability across our diverse portfolio. Only a flexible load like Bitcoin mining can respond with such agility, something traditional data centers simply cannot achieve. It's one of the most compelling advantages of our pure play Bitcoin mining model. Let me now address tariffs, a topic of increased relevance across all global markets. Thanks to proactive procurement, Cleanspark is well insulated from near-term tariff risks. The machines needed to reach our 50 exahash target are already in the US, giving us both certainty and flexibility as trade negotiations worldwide continue to evolve. While tariffs could create significant headwinds for less prepared operators, we have positioned ourselves ahead of the curve. Our scale, planning, and disciplined execution allow us to continue expanding towards our near-term targets without disruption. In fact, if tariffs persist, we may see opportunities to acquire smaller miners at attractive valuations, particularly those unable to afford next-generation hardware under the new cost structures. This is a clear example of how our infrastructure-first, counter-cyclical strategy continues to generate strategic advantages over peers. Now let's turn to growth, where our portfolio-based approach continues to deliver real advantages. Today, we operate 32 mining sites across 4 geographically diverse states. This footprint helps us mitigate weather-related risk while tapping into reliable power markets, particularly in states that are net electricity exporters. In Q2, we added more than 3 exahash of capacity in Wyoming alone. The remaining exahash needed to deliver on our mid-year target will include the completion of ground-up development in Wyoming and Tennessee, paired with the expansion and optimization of several of our operations in Georgia and Mississippi. Looking beyond mid-year, we have active projects ongoing with miners and infrastructure paid for that will push us over 57 exahash. For long-term expansion, we've already secured infrastructure in hand or under contract to support growth beyond 60 exahash. We intend to put this infrastructure into use in the lowest cost and most advantageous areas. We currently view Tennessee and Wyoming as particularly attractive places to continue to grow. Looking ahead, we intend to modify how we provide growth guidance. We will reduce the use of time-bound guidance related to hash rate expansion. Our growth will remain disciplined and opportunistic, pursued where and when we see strong ROI positive potential, primarily funded through non-dilutive sources. This approach aligns with our proven countercyclical strategy and reflects our commitment to preserving shareholder value. In today's more volatile market environment, strategic flexibility is essential, and we are focused on avoiding unnecessary time-bound commitments that could undermine long-term value creation. To be clear, Cleanspark will continue to grow, and our current projects are expected to increase hash rate towards 57 exahash, and our vendor option can support growth to 65 exahash. And I look forward to providing more updates in the months and quarters to come.
That's interesting.
While we hold ourselves
kind of withdrew the time-based guidance there.
We're also proud to be recognized externally for our growth and leadership. Cleanspark was recently ranked number 35 in the Financial Times 2025 list of the 500 fastest growing companies in the Americas. This is a reflection of our growth over the past 5 years and shows the value of our strategic discipline and our team's grit and adaptability in a rapidly evolving sector. We were also added to the S&P Small Cap 600 Index, a milestone that enhances our visibility in public markets and broadens access to our business model for institutional investors. Following our inclusion, institutional ownership in our common stock increased to nearly 64%, a strong vote of confidence from some of the world's most respected asset managers. While others may focus on headlines, we remain committed to substance. building a resilient, vertically integrated Bitcoin mining company grounded in operational discipline and long-term vision. As the only remaining public, pure-play, vertically integrated Bitcoin mining company, we're building an enduring business, applying traditional disciplines to one of the world's newest industries and most important assets. Because of the investments and decisions we have made, we are well positioned to capitalize on the improving landscape. We've established a strong track record of market leadership. Cleanspark has consistently led with foresight. We've invested early in infrastructure. We pioneered a capital strategy that will minimize dilution. We secured ASICs through countercyclical buying, and now we're setting the standard for responsible digital asset management. Each of these moves has delivered real, measurable value, and we are confident our latest steps now and in the future will do the same. I often use the term escape velocity to describe Cleanspark's current trajectory. In a business context, it means we've reached a critical inflection point where our scale, operational performance, and financial discipline combine to generate sustainable, positive cash flow well in excess of our cost. Our operations, anchored by market-leading data centers and energy infrastructure powered by best-in-class miners, are not only profitable, but also self-funding. This marks our transition from growth dependent on external capital to a model capable of being driven by internally generated returns. It also reflects a deeper momentum. We are expanding our lead in operational efficiency, capital stewardship, and market adaptability. And that separation from the pack is accelerating. As the last pure-play Bitcoin miner, we are creating a durable competitive advantage and reinforcing strong market fit. Our role as a flexible energy load adds even more strategic value, enabling us to support power grids while scaling nationwide. Escape velocity for us means optionality, the ability to invest in ourselves, adapt to changing conditions, and compound growth without compromising our core. We are achieving disruption through discipline, and we're just getting started. Finally, I want to recognize the incredible work of the Cleanspark team across the country. Your execution, dedication, and belief in our mission continue to set us apart one block at a time. With that, I'll turn it over to Gary for a closer look at the financials. Gary?
Zach's salary was $800,000, not
Thank you,
$30
Zach.
million.
As Zach mentioned, our second fiscal quarter was solid.
The
for
bonus
Cleanspark,
and
despite
stock-based
some of the challenges we faced.
awards were
Let's look at the numbers.
very, very high. That's
Our
what you're
revenues for
seeing.
the quarter were 181.7
But there's
million.
there's an emphasis on decreasing those. So
62.5% over the same quarter last year. We produced 1,957 Bitcoin for the quarter, 74 less than the same quarter last year, only 3.6% fewer, despite block rewards being cut in half in late April 2024. We are almost at the same number of Bitcoin produced as pre-halving due to our increasing exahash and increased fleet efficiency from our best-in-class miners. It is also important to note that our average revenue recognized per Bitcoin produced in Q2 was $92,811, which is an increase of approximately $38,000 or 69% over the same quarter last year. When compared to the immediately preceding first quarter, our revenues increased 12%. As Zach has pointed out, this is primarily due to the increase in average revenue per Bitcoin and growing hash rate. Looking at our margins, our gross profit increased by $18.8 million year over year with a profit margin of 53% for this quarter. When compared to the immediately preceding first quarter, our gross profit increased $4.3 million or 5% during the periods. This quarter, we recognized a net loss of $138.8 million, a change primarily driven by the decrease in the mark-to-market adjustment in Bitcoin value between December 31st and March 31st. Our adjusted EBITDA was a negative $57.8 million for the quarter, also driven by the mark-to-market adjustment. However, I want to point out that when normalized and adjusting for the mark-to-market item, our operations produced approximately $70 million of positive EBITDA. On a normalized basis, $70 million represents 39% net margins, which is representative of the cash-on-cash returns we seek. Notably, our marginal cost per coin was approximately 42,600, a 26% increase over the first quarter. The increase in our marginal cost per coin can be attributed both to an increase in mining difficulty as well as rising power prices. Our average cost per kilowatt hour increased during the quarter to 6 cents. And as Zach mentioned, this was a result of intentionally managing to a margin rather than to a specific cost per kilowatt hour. I want to again emphasize, we manage our operations based on margin rather than to a specific unit price of energy. We ended the quarter with $97 million in cash and 11,869 Bitcoin, representing a fair value of approximately $980 million. In total, the company had almost $1.1 billion of liquidity at the end of Q2. When it comes to our Bitcoin treasury, I want to note one change on our balance sheet. For the quarter ended March 31st, you will see our Bitcoin value split between short-term and long-term classifications. This classification meets accounting requirements as the company expects to hold at least 15% of its treasury in deep cold storage for at least the next 12 months.
That's what that non-current Bitcoin number was. I was wondering.
Will be used to sustain growth and for strategic treasury purposes. I'll have more on that in a few moments. But it's important to note that all Bitcoin on the balance sheet as of quarter end remains liquid and available for us to utilize. Total debt as of the end of the quarter stands at $64.7.2 million. Note that this amount is net of debt issuance costs of approximately $16 million, which were incurred as part of the company's $650 million convertible transaction in December. As a reminder, this issuance has a 0% coupon and an effective conversion price of $24.66 per share. Looking deeper into the balance sheet, there are some other details I would like to highlight. Our capital strategy has matured significantly, enabling us to pursue non-dilutive funding options that support both our operations and long-term growth. Cleanspark has achieved escape velocity. We have the ability to self-fund operations and grow our Bitcoin balance while enhancing shareholder value. In April, we were proud to expand our relationship with Coinbase through their Bitcoin collateralized lending program as part of our broader strategic approach to capital management and increasing our line of credit with Coinbase Prime to $200 million. Our Bitcoin holdings of 12,101 at the end of April represents over $1.2 billion at today's Bitcoin price, more than reversing the prior quarter's mark-to-market unrealized losses. We believe this is the right time to evolve from a nearly 100% HODL strategy adopted in late 2023 to using a portion of our monthly production to support operations. This represents a meaningful strategic distinction from many of our peers who continue to rely on equity dilution to fund operating costs or increase leverage to grow their Bitcoin reserves. We view our approach as deliberately strategic rather than ideological, particularly now that we've reached our current scale. While we remain committed to Bitcoin as a long-term, hardened asset, we believe a more effective way to increase shareholder value is through a balanced approach between monetizing new production and growing and monetizing our treasury. As part of this strategy, we tend to further diversify our capital stack. As we have consistently emphasized, our focus is on ROI and our ability to make real-time decisions in the market. Given today's market environment, we view the revolving line of credit as the most efficient and responsible path to supporting accretive growth, and our strong balance sheet positions us to take full advantage of that opportunity. It is our intention to use proceeds from the revolver for accretive CapEx purposes. Furthermore, we are conscious of adding leverage to our balance sheet and expect that we will rapidly pay down the line of credit and not hold high balances for extended periods of time. We intend to manage the business on a net debt basis to ensure proper liquidity to cover all debt obligations. On the topic of CapEx, all infrastructure and machines required to get to 50 exahash is fully funded. I want to take a moment to discuss our investment in growth past 50 exahash. We have paid approximately $100 million towards additional infrastructure supporting almost 200 megawatts. We have also paid approximately $135 million for state-of-the-art ASICs, which equates to approximately 7 exahash above and beyond our 50 exahash target. And importantly, the vast majority of these are already stateside. On the topic of tariffs,
That was a big
I'd like
nugget
to
right
discuss
there.
a unique transaction we recently completed. In April, we exercised a portion of our option with our vendor for 13,200 of the latest generation miners. The total amount due under this exercise was approximately $76.6 million. However, we negotiated a favorable payment arrangement using Bitcoin, whereby the vendor accepted Bitcoin as consideration with an exchange rate at 150% of Bitcoin spot price on the date of payment. This means we transferred 691 Bitcoin with a fair value of approximately $66.7 million, or a spot rate of 96,600 per Bitcoin. This resulted in savings of approximately $10 million as the vendor applied a Bitcoin price of $110,941, or 15% higher than spot, towards the purchase. Additionally, as part of the transaction, we received a free call option to repurchase 691 Bitcoin at the $110,000 price on a date later this fall. We expect to exercise this option if the fair value of Bitcoin is greater than this amount. If the fair value is less, we essentially have locked in our miners at a lower price and more than offset any potential tariff impacts. Now I want to provide an update on our Bitcoin treasury efforts. On our past 2 calls, we provided a brief glimpse of how we have been building an institutional-grade digital asset management function. As of today, we're in the final stages of negotiating and executing ISDA agreements, which will govern how trades will be settled and the amount of collateral we will need to post. Additionally, we have identified strategies complementary to our operations and capital strategy for the first phase, in which we have referred to as the crawl, walk, run process. Overall, when it comes to execution, we're in the crawl phase, and we'll soon be implementing our strategies to rapidly advance to the walk phase and continue scaling from there. I will tell you, however, that based on the modeling and indicative pricing we are monitoring in real time, the opportunity is quite exciting. If it seems as if this has taken some time, that's right. This has been a very deliberate process. We've been engaged in rigorous evaluations of treasury strategies and the counterparties we choose to work with. We are also very conscious of collateral requirements in order to maximize returns and minimize counterparty risk. Despite our deliberate pace, we have led the rest of the industry when it comes to establishing this function, performing proper diligence, and are now prepared to maximize performance of our Bitcoin treasury. In many of the conversations we've had with potential counterparties, the message has been the same. We are the first public miner to have a professional and thorough RFP and due diligence process. We appreciate the partnerships we have developed and the willingness to lean into this due diligence process. Together, we all agree reducing counterparty risk is important for the industry as a whole. To those partners we have selected at this time, we look forward to working with you. As we enter our next phase, growing beyond 50 exahash, we believe Cleanspark is uniquely positioned to deliver sustained, long-term shareholder value as we continue to execute on our strategic vision and evolve. With that, I'll turn the call back over to Harry to open the floor for questions.
Thanks, Gary, for that detailed financial overview.
Really quick, my camera got too warm, so I'm literally using my iPhone as a face cam right now. So that's what's going on. The audio might not even match the video. I don't know.
In order to ask a question, press star, then the number 1 on your telephone keypad. We'll pause for just a moment to compile the Q&A roster.
That literally happened right when Gary was dropping
Your
nuggets on
first
nuggets.
question comes
So I
from
didn't hear everything. I'm about to re-listen to that. There was some big news there.
Good afternoon and great quarter from an operating standpoint, guys. First one for me, maybe to Zach. It'd be great to get your outlook for the growth in the network hash rate in 2025 and how you're thinking about Cleanspark's market share within that context, especially now with the tariffs and some of your peers pivoting over to HPC AI.
Hey, Mike, great question. Thanks for joining the call today. What we've seen, I think, is a little bit of a plateau effect that's kind of interspersed with some growth. And so, I think that the limited growth we've seen on the network is likely due to upgrade cycles that are naturally occurring in the space. But I don't know that we're seeing a lot of meaningful new investments, which is a great thing for us. We're sitting at about 5% of market share and growing. And, our intention is to maintain and grow that market share. And we think, all things considered, with how we're monitoring kind of global movement going, that we're incredibly well positioned to do so.
Great. Appreciate the color, Zach. And maybe one for you, Gary. If you could just talk about how you envision the digital asset management team generating shareholder value over time and how that treasury approach differentiates you from some of your peers out there.
Yeah, thanks for the question, Mike. So we've been, as I mentioned in my comments, we've been hard making sure that we select the right counterparties and partners on this journey. And we feel confident that we've really chosen the best of the best. And I'll tell you, there's a number of strategies that we're looking at. The ones you've heard me talk over the past really couple of years is something as vanilla as covered calls. Let me share some information that I pulled this morning because we monitor this in real time, and I really can't think of any other word to use other than these premiums are rather juicy. I know it might be a little hard to model juicy sometimes, but let me give you an idea of what excites us here. Bitcoin's trading around 101,000 right now. So if we were to issue covered calls at the money, so with a strike price of 101,000. 1 week out, that's a premium of a little over $2,400 or 2.4%. Annualized, that's 97%. Now, naturally, we wouldn't put the entire Bitcoin balance at risk at the money, but at least a covered call at the money would allow us to always stay ahead of spot by at least a couple points. And we've always been confident we'd be able to do that with this basic strategy. And since we're sellers now of Bitcoin to help pay for operating expenses, that's going to be very important for us to always stay ahead of spot. Additionally, when you start to ladder this out, I mean, if you're even to look at, a 2-week strike at 101,000, it's like 3.4%. You go to 102,000, so $1,000 out of the money, it's about 3%. So again, those are pretty interesting premiums, and again, juicy yields for such short-dated options. But that's just one example of what we're looking at, and ultimately this is going to generate what we're internally calling this flywheel, this treasury flywheel, that will allow us to generate some cash that we can then have optionality and flexibility as to whether we then further reduce the reliance on selling a production and apply towards operating expenses. We could pay down debt, or we could roll it into other instruments and maybe even into Bitcoin.
Great. Thank you for taking my questions, guys.
Your next question comes from the line of Greg Lewis with BTIG. Your line is open.
Yeah, thank you and good afternoon, and thanks for taking my question. I wanted to follow up on Mike's comment, kind of questioning, but in a different way around, Cleanspark, you guys have kind of stayed true to Bitcoin mining and have really kind of, moved this forward as, other companies explore, other opportunities elsewhere outside of Bitcoin. Has that had any impact, these other less appetite for rigs from some of these other larger players? Has that had any noticeable impact on the pricing of mining rigs and just, given the fact of Cleanspark and a couple others real focus on just Bitcoin mining? I imagine that, pretty much any rig OEM, is looking to really increase or build that relationship with you. I mean, is that something that, I guess in that question really, what is happening with rig pricing, just given the lack of the slowdown in buying from some of your larger competitors? Has there been any impact?
Yeah. Hey, great question. I appreciate you joining the call. It has. I think it's what created the opportunity for that unique transaction that led to a 15% decrease into what was already an industry-leading best price. And so, we've always prided ourselves for the capital that we're deploying, especially to rigs, as being market-leading. So we've always attempted to have the very best price that rigs are being purchased at. But I think what we're seeing now is because there are less buyers in certain pockets of the market, it's a supply and demand question that we have the answer to. And so it does give us a great opportunity to acquire more rigs at a lower cost. So we are seeing some. I think that, this 15% discount down is probably step one of many, because I think, if you think at how this market really works, they have to print chips, 6 to 9 months in advance, then assemble it into the final units that ultimately then get delivered to customers. So this slowdown in buying that's happened, I believe the shock to the miner and ASIC market has not yet been felt. And I think we'll continue to see prices pushing down even on, potentially even the next generation beyond this one. I would expect to see price improvement that we would stand to benefit from greatly.
Okay, great. Super helpful, Zach. And then Gary, cognizant of the announcement to kind of be, covering our expenses through Bitcoin mining sales. If I were to just look at, Q1, it looks like your, kind of OpEx, between SG&A and services, et cetera, is like in the low $30 million range. Basically in April, you sold, it looks like around 35 million of Bitcoin. Without pigeonholing you, is that did we just cover the CapEx for the quarter with a month of sales, or put another way, did we just cover the CapEx for Q2 with April sales? Is that a fair way to think about it, Gary? Yeah.
Yeah, this is how I would think about it. You essentially take the inverse of our margin, and that's ultimately what we have to pay. I mean, obviously plus overhead, but that nut is monthly about $35 million, give or take, right? Because you have some payables that come and go. So, but on average, it's about $35 million a month. Anything that we raise above that could go towards CapEx or servicing the line of credit. As you may have noticed, at least on the April monthly production, we've drawn down a little over $100 million for the line of credit, 100% of which is being used for accretive CapEx. And obviously, we'll have to pay down, we'll have to sell some Bitcoin to service that. But with Bitcoin price rising and the fact that we have more exahash coming online, that just means that we have to sell less Bitcoin every month just to cover the monthly nut.
Yep, no doubt. All right, super helpful. Thank you very much.
Thank you.
Your next question comes from the line of Brian Dobson with Clear Street. Your line is open.
Yeah, thanks very much for taking my question. I think avoiding dilutive capital raises is pretty impressive, and given where the shares are, probably a smart thing. As you think about the valuation of your public equity, would you ever consider using some of your HODL to repo the shares?
Yeah. I'll take that one, and Zach, chime in if you have
asking about a share buyback here.
Input. I'll tell you, look, we look at all levers available to us. I mean, that's why we're a public company, right? And as we mature and we talk about building out this capital stack, there's other instruments and new instruments that become available to us. And I'll tell you right now, when we look at the fact that our book value is greater than our market cap, that really nudges us towards not utilizing equity. And so when you have $1 billion plus sitting on the balance sheet of Bitcoin, we just think that that's a whole lot easier capital and, of course, lower cost capital to access. So that's just how we think about it. I mean, if we were to get a premium on the equity, we would consider that. But at the end of the day, driving shareholder value remains one of our top priorities. And the way that we're doing that is to continually grow the balance sheet by paying down debt and growing the Bitcoin balance.
And Brian, to add on that, at tail end here, the tail end of the comment was, about buying back shares. And, from our point of view, with a 53% margin to produce Bitcoin, which we think is, current, I'm going to step back. The way we think about Bitcoin is there's going to be half the amount of Bitcoin produced every day in the world in 3 years. And as a result, there is no better time to acquire Bitcoin than right now. And so we are prioritizing that. Yes, we are putting some of that back in the market, but, we really believe that Bitcoin is the right place to do it. And as we roll Bitcoin into more Bitcoin via investing in CapEx, that of course then gets us more Bitcoin is the way we're thinking about it. So as of right now, at the current market price of Bitcoin, we're going to continue investing in things that get us more Bitcoin. It's always an option, and optionality is one of the things I referenced is in my talking points. That's how we view it. We have flexibility, we have optionality. There's nothing that says we can't do it, but as we sit here today, that's how we're thinking about it.
Yeah, very good. And just as a follow-up to some of the comments that you made on the facility, do you think we'll see more Bitcoin-backed facilities in the future? And as mining operations proceed to the next halving, do you think this is call it the way forward for the business, not just your business but the sector in general?
Yeah. Look, we had a market clearing exercise when we went out and
it's a ton of risk, DJ.
Really upsizing the Coinbase line of credit.
Contrary to what Saylor says, that is a ton of risk.
And we received a lot of inbounds after our press release. So I would tell you that, yes, there's a lot of capital that wants to be deployed out there using Bitcoin as collateral.
Great. And just one final one, if I may. As you look out in the market, there are many of your competitors.
Grill, they just bought back 150 million shares not long ago.
What does the market look like for bolt-on acquisitions and M&A in general for mining operations? And is that something that would interest you?
Yeah, absolutely. We were the most active acquirer for the last couple of years. Last year it was mostly private companies. We of course did do one public company last year, but in addition to Grid, we did 6 private acquisitions. So bolt-on acquisitions are something we're always open to, especially when valuations are advantageous. And we do think that, depending on how the market goes and, if there's tariffs and different tariff pressures on the cost of actual mining rigs in any areas, great opportunity for us to come and capture some of that market share with, as we said earlier, beyond 50, we already have 7 exahash of rigs that we've largely brought stateside. So absolutely, just like always, our highest and best interest is of empty shelves and high quality infrastructure. So I do think that there will be opportunities. So and we look forward to some of our peers as they exit. We're always willing to take the phone call.
Great. Thanks very much.
Your next question comes from the line of Paul Golding with Macquarie Capital. Your line is open.
Thanks so much. For Zach or Gary, I just wanted to drill down a little bit more on the incremental capacity that you've paid for ahead of or past the 50 exahash goal. How much of that capacity is liquid cooled versus air cooled? And are you making new or different determinations as to the type of infrastructure and cooling that you're rolling out because of the tariff dynamics? Not to say that that is a hindrance to deploying the capacity, but just how you're thinking about that and whether that might have an impact on efficiency going forward or any other impact operationally. Congrats on the quarter otherwise. Thanks.
Hey, thank you, Paul, for joining. I would say when you look at the prepaid amount on the infrastructure, it really all relates to immersion cooling. We think that it is still the best path forward. The majority of the rigs that we've also brought in country related to that are also immersion cooled. Now we have brought over, a portion of latest gen also air cooled to, fit into tuck-in acquisitions and other similar opportunities because that's often what is readily available on the market. But on our, ground up builds, we are committed, into the future, into immersion cooled, because we think it provides the optionality that will be necessary in the next 3 to 5 years in particular, and into the next halving.
Thanks. And I guess this is just a quick follow-up. Are you seeing any impact to pricing on that as maybe not the immersion tanks given more direct-to-chip liquid cooling for AI, but some of the infrastructure around heat exchanging and pumps? Are you seeing any price impact from the demand that we're seeing in HPC and how that might be pressuring the products to enable this functionality in the space?
What I can say is in our supply chain, we are still the largest buyer because of our growth. A lot of, if you're an HPC group that wants to announce something you're going to do tomorrow, you're probably not purchasing still for a while as you work on your permits, your designs, your plans. As we all know, most HPC data centers take 3 to 5 years to build. So we are still well ahead of the curve, and we do buy our supply chain in advance. That has given us an advantageous place in line, is probably the way to say it, as we have demand for infrastructure.
Great color. Thanks so much.
Again, if you would like to ask a question, press star, then the number 1 on your telephone keypad. And your next question comes from the line of John Todaro with Needham & Company. Your line is open.
Hey guys, thanks for taking my question, and appreciate the commitment to limiting dilution. First question, just going back to Gary, some of your comments on the yield you could generate on Bitcoin and the treasury strategy. I mean, do you think we're getting to a point where it's fair for us to start forecasting out a yield on that? Any kind of guardrails? I know you laid out some, but it seems like it's still kind of up in the air. And then my next question is, and I guess I'd frame it almost the opposite way that other peers have asked it, but do you actually think, we keep hearing that major hyperscalers like Microsoft are actually kind of pulling back spend? Have you noticed it might be actually getting easier to find power and sites now, whether it's kind of a weekly or month-over-month basis? Any commentary there would be appreciated.
All right. Hey, John, thanks for the question. I'll take the first part of that. When it comes to the yield, I mean, we're not prepared to give any guidance here. Again, we're in the crawl phase of the process, but I believe on the last call, we said that we're targeting like mid-single digits on an annualized basis for the entire Bitcoin.
Okay, I'm not sure what just happened. It's like they just kicked us out of the call. I'll try and refresh. It says the broadcast has ended. Wonder what that was all about. Did you guys, I don't know if any of you had it pulled up. Did that just happen to everybody? That's weird. Let me pull up a Twitter Spaces and see if it happened to them.
I wouldn't have imagined avoiding a dilution this early in the cycle.
Yeah, I don't know. It says broadcast has ended. Maybe I was slightly behind or something. It happened to everybody, it says. Okay, no, Calvin. Okay, it must have been on my end. Calvin said it actually finished, but I was delayed by a couple minutes. Interesting. I could have been delayed. That could have been the case. So hopefully we didn't miss anything too big in the last couple of minutes. I'll go through some questions and comments here. There's some things that I want to cover in particular. And, okay. I was behind, people say. Okay, all right, good. So that was on my end. I'm glad they didn't, get hit by lightning or something. Okay, anyways. No, I honestly, people are asking why, people were acting like Cleanspark is just dumping after hours. It's down like 2%. It's down like 2% after hours. And I think it's a lot of just algorithms trading the numbers right now. You have algorithms on Wall Street that Analysts put in their estimates, and if those numbers miss their estimates, the algorithms will sell shares. And if you did your homework at all, you knew that the revenue and the earnings numbers were going to come in lower than expected. Wall Street analysts have not been good at keeping their estimates accurate as the price of Bitcoin fluctuates. So that's kind of what's happening. Honestly, I thought this was one of the best calls Cleanspark has had in the 5 years I've covered them. And if it wasn't, I wouldn't be lying to you. I think it was 2 or 3 calls ago I said that was the worst call that I've had that I've experienced while covering Cleanspark over the last 5 years. But this, I think, was one of the better ones. One tidbit of information I thought was incredible, absolutely incredible. They mentioned how they worked out a deal with Bitmain to purchase. Well, they had that call option that outstanding that I talked about before the Q&A started, or before the earnings call started. They negotiated that option to purchase 13,200 next generation immersion cooled miners. But they paid it in Bitcoin, and Bitmain accepted a 115% markup to the current spot Bitcoin price. So Cleanspark saved $10 million there. And that's a big deal. And they also, what was it? They also received a call option to buy back, repurchase that 690 Bitcoin at the $110,000 price point that Bitmain applied to the deal. That was a free call option they got. So if Bitcoin appreciates above $110,000 per coin, Cleanspark will exercise that free call option they got, and they'll receive Bitcoin for less than what the spot price is. So that's a heck of a deal. And I would anticipate that's just a result of Cleanspark being Bitmain's largest customer. I thought that was a huge tidbit, huge nugget of information there, that your Wall Street algorithm, your algorithms aren't going to pay attention to, and they're not going to realize. So a lot of really good news actually here. They also said they put $100 million towards additional infrastructure, basically for 200 megawatts. And they also paid an additional $135 million for state-of-the-art ASICs for an additional 7 exahash per second above and beyond their current 50 exahash target. So their growth is funded past 50 exahash per second, but they didn't give a timeline for when that growth is going to happen, because they're going to be patient and diligent with the deals they look for. Meaning they don't want to have a deadline where they have to rush to make a really bad investment decision with the capital. Instead, they're not giving themselves a deadline, and they're just going to take advantage of the great ROI deals that present themselves in the months to come. Now, I think more than likely, that 7 exahash per second will be deployed before the end of 2025. But I actually I appreciate that they didn't give themselves a deadline in that sense. Because it allows them to be more diligent and do more homework and really take the best deals, rather than feeling the pressure to make a less than perfect deal that they wouldn't otherwise make if they didn't have a deadline. That also will bring back into the equation some, I guess it would decrease predictability a little bit, which I think is actually a good thing. It's going to be a good thing, because for quarter after quarter after quarter, for Bitcoin mining companies, going into these quarterly results, you pretty much can predict what's going to happen, because we know the price of Bitcoin. We know how much Bitcoin they're mining every month. So we know what their revenues are going to be. We generally know what their energy costs are going to be. So the numbers really don't give us any new information. So actually being able to surprise the markets with growth, instead of saying, well, our growth is going to happen at this point in the future, and then the markets just price that in. Well, now it's going to be somewhat of a surprise. At least every once in a while, it'll be a little bit of a surprise how much growth has taken place, which I think could actually be a really good thing. And I see everybody talking about short sellers and whatnot. Decreasing predictability actually helps you fight against short sellers in some sense. It adds a little bit of volatility to what can potentially happen. If you know exactly what's going to happen, it's easy to short sell something. Or it's easy to buy something, depending on what side of the coin you're on. But increasing volatility a little bit, or decreasing predictability, I think could actually be a pretty good thing. Let me know if you guys have any questions or comments. Those are kind of the two biggest nuggets that I highlighted in my notes as I was listening to that earnings call. Again, I thought it was actually one of the better earnings calls we've gotten from Cleanspark in the last 5 years. I am walking away from that very pleased, actually, and I'll just look what Cleanspark stock is doing after hours. It's down 2.6%. Again, I think I just chalked that up to a lot of algorithms trading the bottom and top line misses there, when in reality, that really, if you do your homework, you knew that was going to happen. So let's go through some comments and some questions here. I am going to go to my nephew's baseball game here this evening, but I do have some time where we can do a little bit of Q&A and continue to talk about the investment thesis here for Cleanspark. Chris, okay. Yeah, Chris, I timed you out because you have nothing positive to say. It just gets a little bit tiring. You're not adding to the discussion. So let's see. Yeah, Daniel says the down 2% is nothing. Absolutely. If it was down 5-6%, then yeah, maybe that's something a little more than algorithms. But it's only 2%. And again, I wouldn't be surprised if that climbs back. I wouldn't be surprised if that climbs back during the trading day tomorrow. Okay, let's go through some questions here. Let's see. Sean, I don't understand that. If Bitmain wanted Bitcoin, why wouldn't they just buy it at the market price themselves? Honestly, Sean, I haven't had time to really think through this entire deal. I think it's probably just a product of the crazy profits that Bitmain has on their mining rigs. And it's a way that they can continue to offload, their inventory and continue to maintain their market dominance, because anything that threatens their market dominance, like tariffs, obviously decreases the strength of their business. So that's my initial reaction. You're going to have to give me like 10 minutes to really think through that. It's a good question, Sean. Maybe I'll have a post out on my X regarding that to give you some more information after I really think it through. Let's see. A lot of questions, a lot of comments here. Thank you guys so much. Let's bring up, I'm trying to grab good comments here that'll add a lot of value. Let's see. Okay, let's bring up this comment here. Trainer B says, just like the gold rush, better for Cleanspark to be selling the shovels with low risk than risking it all mining for gold. If we have no miners, the supply dries up. Slow and low is good. So I guess I'm not following exactly what you're saying there, but I would agree. People forget that if mining Bitcoin becomes unprofitable, the whole entire Bitcoin network will fail and the price of Bitcoin will go to zero. First and foremost, the Bitcoin network is designed in a way to ensure that the network always stays secure and it's always profitable enough for enough compute to be online to secure the network. If it becomes unprofitable, that's why you have the difficulty adjustments that go downwards. So it's actually, there's kind of a safety net, actually. It sounds crazy, but there is a safety net for Bitcoin mining companies. And I did appreciate how in this earnings call, Cleanspark officially projected themselves as literally the only pure play Bitcoin mining company left in the public markets. And that is crazy to think about how all other companies have pivoted. Hodl says, without dilution, there's no way this stock is not going to $20 at least. That patience will pay off eventually. I agree with that. Again, it's going to be a product of what the markets want to pay for. We have to, on the macro level, we have to move past this time period of worrying about a recession. You guys, if you follow my channel, I talk about the macro economy more than anything else, any individual stock. I don't think a recession is likely at all right now, but the markets are convinced of that. And people's, investors and consumers, their sentiment about the economy and their futures is really poor right now. When you're in time periods like that, nobody's going to take a risk. Nobody has extra money at the end of the day to throw into Bitcoin mining stocks. It's just the fact of the matter. Okay. Next question here. Austin said, I'd gladly become a paid member if you limit these live streams to members only. There are way too many trolls here today. Yeah, there were a lot of trolls here today. I unfortunately think people need to project. They feel the need to project their negativity towards everybody else, which I guess is okay. But yeah, there were a lot of trolls here today. Usually I do members only chat, but I didn't want to gatekeep anybody out from talking. But I appreciate that feedback, Austin. You're always welcome to become a member. There's a lot of perks you get. So I would encourage you to become a member and check it out. Sean says, this Bitcoin yield has been discussed for like 3 earnings calls now, and we still aren't seeing any of it. Yeah, we knew it would be, 12 months, 3, 4, 5, 6 quarters before we really see the numbers. I think, honestly, next quarterly report, we're going to start to see some of the benefits of that. You can look at the wallet addresses and see that Cleanspark has moved 2,500 Bitcoin into yield generation mode, but that didn't happen until April. Yeah, until last month. So that was not included in this earnings report. That was for the months of January through March. But next quarter, we should see some early indicators on what, obviously, that Bitcoin yield is going to look at. Okay, next question here. Nerd Shack says, bag holding Cleanspark at $10. Hope I get a double at least by the end of the Bitcoin cycle. Honestly, yeah, some of you will know this as well. I think I've said this for a long time, and people thought I was crazy. I really think the 4-year Bitcoin cycle is it's dead at this point. People were basing that theory on 3 or 4 time periods in the past that all just happened to align with time periods where our economy got really weak. So it's really macroeconomy that drives the price of Bitcoin much more than just the halving cycle does. You have to remember, if there's a perfectly predictable market out there, people are going to arbitrage the crap out of it. They're going to sell the tops. They're going to buy the bottoms, which would render it perfectly unpredictable because they would be bidding up the price on the bottoms and they'd be selling down the price on the tops. It offsets any perfectly predictable market that there is. So I don't ever agree with anybody when they say that there's going to be an end of the Bitcoin cycle. I just don't see that. And, if you really think about what might cause the next bear market or recession or depression, it's probably something with our monetary system failing. Runaway inflation might be the cause. And if that's the case, owning Bitcoin, owning gold, you should benefit from that. The price of Bitcoin should appreciate tremendously in dollar terms. So even the bear market, recession, depression scenario for me, I really think Bitcoin has reached it's kind of reached a turning point. I think the 4-year Bitcoin cycle that people talk about is just, it's done for. Okay. The twin brother said, I'm getting tired of holding Cleanspark. It doesn't go anywhere. Yeah, well, and this comment kind of goes along with one that I've seen a lot. They've said if Bitcoin or if Cleanspark hasn't gone anywhere while the stock market's recovered, what's going to happen when we have a bear market? Well, newsflash, we just had a bear market, 3-4 weeks ago? Did Cleanspark stock go down to $2, $3? No, it didn't. So any bear market right now really isn't that risky for shareholders, in my opinion. There's limited downside because these companies are already valued pretty dang close to their book value. And when you're at that stage, it's really hard to sell down much further from there. And when people say Cleanspark hasn't gone anywhere while the markets have recovered, let me just pull this up. Cleanspark, since the market bottomed, is up 30%. 30% in 4 weeks, 5 weeks, up 30%. Okay? Just keep it in mind. Just keep it in mind. Let's see. B-side question here. Do you know if the new land project has already been abandoned because of the protests, or is it still on Cleanspark's site? Sorry, I just logged in. I don't know if you mentioned it. I did not mention this. I'm just kind of writing off that deal in Mountain City. I don't think it's going to happen. Good question, though. I don't know that officially, but I would just assume Cleanspark's not going to mess with trying to educate all those people that really, really do not want Bitcoin miners in their city. I think they're going to move on to other locations and not waste their time and resources. Let's see. Oh, I forgot to mention in regards to this. Thank you, Brian Wong. He said, I'll just read his comment first. He said, maybe Bitmain doesn't want USD on its balance sheet. Having Bitcoin perhaps allows them a different tax advantage in China, saving on transaction fees, etc. as well. So great comment here, Brian. The piece of the puzzle that I forgot to mention earlier when I covered the deal they struck with Bitmain is this actually allows Cleanspark to avoid paying taxes that they would otherwise pay by selling the Bitcoin to raise cash to pay to Bitmain. So not only did they save $10 million because Bitmain took payment of Bitcoin worth $110 million or $110,000, but Cleanspark is also saving on taxes on highly profitable Bitcoin that they otherwise would have had to sell. So that's a huge deal. Huge deal. DJ says, I agree, no recession, but Cleanspark's $20 to $26 still on the table. I agree. Yes, I think $20 to $26 is definitely still on the table there. B-side, a question about Taylor Monig. I haven't looked at what patents he has, but does that give Cleanspark a competitive advantage? All I know is that he's a master at immersion cooling. Yeah, absolutely, it gives Cleanspark a competitive advantage. There's a reason Cleanspark's facilities have the highest uptime, some of the highest efficiency. It's a lot to do with the work Taylor Monig does. For those of you unfamiliar, he's the chief tech officer at Cleanspark, and yes, he holds probably more patents on immersion cooling than anybody else in the world. I'm assuming that a lot of other Bitcoin mining companies, and maybe they're just data center companies, have tried to poach Taylor Monig away from Cleanspark, which is why he got like a $100,000 raise in his salary just a couple weeks ago. So he is honestly, if there's anybody, and this is no disrespect to anybody on Cleanspark's team, but if there's anybody that deserves a raise, it's probably Taylor Monig. He's worth the money you pay him. And I've actually met him in person. He's the smartest dude I have ever met. I think he's a literal genius. Let's see. Mark asked, can someone explain to me why Cleanspark is lower today than 5 months ago and Bitcoin was lower than it is today? Thanks. Well, it's a lot to do with the optimism that was present after we elected President Trump back in November. And a lot of those things still hold true. What the markets were pricing in, that it was going to be a great presidency for Bitcoin and for Bitcoin mining. Ultimately, though, at the end of the day, Bitcoin has continued to rise because of, geopolitical tensions. If you look back at the price of Bitcoin, anytime geopolitical tensions have increased, the price of Bitcoin has increased. And unfortunately, Bitcoin mining companies are some of the riskier stocks you can buy in the market. So anytime that the markets worry about war or recession, any sort of recession risks, anything that's viewed as risk on in the markets is going to be sold off. And I think that's the difference. It doesn't make a lot of sense, so I don't think it's going to last long. But at least right now, Bitcoin really isn't being priced as a risk on investment, while Bitcoin mining stocks still are. And this could also just be a result of what, you have your Michael Saylors. You have a lot of people buying spot Bitcoin, again, because they view it as not a risk-on asset. So they're buying spot Bitcoin, which operationally, absolutely, it helps the Bitcoin mining companies. But those are two different clienteles of potential investors there. Your CEOs that are buying spot Bitcoin are much different than the investors that are going out and buying stocks in the equity markets, especially the Bitcoin mining stocks. So there's kind of a dichotomy there that I don't think is going to last forever, but that's kind of my explanation of it right now. Let's see. Bitcoin's $4,000 to $5,000 off the all-time high. Yeah, it's getting real. Spin Second Service says, I've lost a lot of money on CleanSpark, so I have a right to complain, Rex. Yeah, I'm not saying nobody has a right to complain. It's absolutely been disappointing. You just have to think of it through the lens of operations rather than lottery ticket. This happens all the time. I've been in this stock for 5 years. There's been so many time periods where the Bitcoin mining companies and CleanSpark are so heavily disrespected, and people all over my chat, all over my YouTube page, all over my X are just selling everything. They're giving me so much grief. They're giving the company so much grief. And then all of a sudden things flip and everybody misses out while CleanSpark rises 350% like it did in 2023. There weren't very many people that ended up seeing that through. And the people that are the most upset right now are the ones that bought the top in 2023 rather than the ones that bought the bottoms in 2020 and in 2022. So you have to value these companies operationally. They are not lottery tickets. They're not get-rich-quick schemes. And that goes for any bull market run we get, any bear market fall we get. Think operationally. I know nobody agrees with that, but that's what you have to do. That's how you see success. I can't pound the table enough on that. DJ says global liquidity drives price. Yeah, and that's also true. That is also true. Wheelan, Ohio says, yeah, Mountain City is the Tennessee deal. I think they've backed out of that. I don't think that's going to happen anymore. Could larger companies like Mara or MicroStrategy buy CleanSpark? Yeah, they theoretically could. I mean, anything's on the table. I don't think CleanSpark would accept those buyout offers, though, especially at current valuations. I don't think it would happen. Okay, here we go. Austin, I may have missed it, but did CleanSpark talk about selling options for additional revenue? Yeah, they did mention that a little bit. We're still waiting for a little more color on it. But yes, they did. And they're looking for any way to protect their business model in the case hash prices drop. And if they do succeed at that, you know, these 70, 80, 90% declines in share price are going to be no more. If CleanSpark can find a way to buoy its business when hash prices drop. And that's what they're focused on. They're focused on staying power, resiliency, etc., discipline, you name it. Pierce says, with Mara holding over 48,000 Bitcoin and mining more than CleanSpark, do you think it has better value than CleanSpark at this point? Personally, I just think CleanSpark does things best. And Mara, yeah, there's value there because the market is assigning essentially zero value to Mara's mining business, but I think that's probably for good reason. Mara's kind of trying to become this jack of all trades. They don't do anything extremely well. They're a jack of all trades. They know a little about a lot, but they're not a master of anything, I guess is a way to put it. And I really don't agree with companies that go out and buy spot Bitcoin to put that on the balance sheet. Shareholders can do that themselves if they want to buy spot Bitcoin. There's nothing that makes a public company going out and buying spot Bitcoin worth more than Bitcoin you could just go out and buy yourself. There's no reason to pay for a company that does that, in my opinion. Anyways, guys, my camera's getting warm again here. I got a baseball game to get to for my nephew. Thank you guys all for showing up. I appreciate all the support. We're going to have some more videos posted here on the YouTube channel soon. We're going to be talking in the members Discord here tonight quite a bit. And I'm putting together a booklet of interpretations on all of these mining companies' earnings reports. That'll be released here in the coming days for members as well. There's a lot of perks you get, so just check out that membership. Just Google Patreon, RexFinance, and you can choose an annual plan. It'll get you a big discount, or you can just choose a monthly plan, and if you don't find value in it, I have a 100% refund policy. You help support me. I'm entirely self-funded and independent, so that means a lot to me. But just the fact you guys showed up today to listen to this earnings call with me, thank you guys so much. I appreciate all you guys' comments. Even if we don't always agree or see eye to eye, I'm not somebody that's going to... I'm not somebody that's going to get offended. I'm not somebody that's going to tell you you're wrong. I'm just here to give you my opinion, my take. I think any sort of discourse and discussion is worth it. And I think everybody is warranted to feel disappointed right now. I think the management team of Cleanspark is probably disappointed in the current stock price. So we're all in the same boat. We all have the same thing in mind, but we have different opinions about things. But I think that's what makes humans special, in my opinion, is being able to discuss things, not always agree, but still be friends, still support each other. And that's just the thing that's missing in today's day and age. So thank you guys so much. I truly think we have the best community out there of any, I'll just say on YouTube, but if we want to be more granular in the Bitcoin mining space as a whole. Thank you guys so much again. Have a great rest of your day. Stay blessed. Keep 10 toes grounded, your chin up. Peace out, guys.